Hello there. Hello there. Welcome back to Financial Accounting and 5. In this video, we want to look at a question from November 2023. Still working on that question paper. This is question 5 on that question paper. And we are going to look at incomplete records, whereby we're going to prepare the control accounts to find the incomplete information. So we have got question 5 that we have here, and it reads: the following information appears in the incomplete records of Jab Tube clothing stores for the year ended March 2022. And then we are given balances on 1 April 2022, which is that this is an opening balance that we have in terms of trade receivables control, inventory, trade payables control. And then also we are given information that we are given there of during the year the following transactions took place. Then we have got other information that are going to follow. So you'd see that under the list of balances, we also have additional information that we have there in point form. And then on the required part, it reads: use the above information to open the following accounts. We've got the trade receivables control account, we've got the trade payables control account, trading account, and profit or loss account. So we are going to prepare this control account first, and then we find the figures for the trade receivables control account. We need to find the figure for sales, and then for trade payables control account, we need to find the figure for purchases. Remember, control accounts are a summary of individual accounts that we find in the ledgers. In the form of trade receivables control account is just a summary of the account that you are going to find in the sales ledger. And then trade payables account represents summary of individual accounts that we find in the purchase ledger. So information that we find in the control accounts is taken from the day books. In the form of trade receivables control account, we are taking the information from the sales and day book. And then trade payables control account information is being taken from the purchase table. So I would see that the total of the total balance that we are going to have in the control account should be the same as the total balance after adding all the individual accounts in the ledgers. If ever there's a differential in terms of those balances, there's need now to prepare the reconciliation, whereby you are reconciling the two balances. So this is what we have. So on trade receivables control account, we're going to start with the opening balance. And the opening balance, we find it in the beginning of the question here, where we have got balance on 1 April 2022. That's where we've got our opening balances. So for trade receivables control, the opening balance that we are given there is 50,667. So we're going to go there on the other section and put that figure as our opening balance. And remember, it will be on the debit side. So here we are saying balance BD. This is our opening balance, and we've got 50,667. And then we can go again to find any other information that we should put in the trade receivables control. So we go now on during the year the following transaction took place. First, we have got a year settlement discount received from suppliers. And remember, suppliers are going to affect our trade payables control, so we can leave that one. Then we've got a settlement discount allowed to debtors. This is another transaction that we need to take notes. So we are saying a settlement discount allowed to debtors. So remember, debtors are those businesses or people that we sell goods to on credit. So when we give them discount, it means the money that they are supposed to pay is going to be reduced. So it means it's an expense on our side. So it's going to reduce the amount that they are going to pay. So the settlement discount is put on the same side that we put the payments of that is being made by the debtors. So we are going to take this figure and put it on the opposite sides of balances that they are owing, which is the credit side. So we are going to the credit side and put 7,067 as settlement discount allowed to debtors. So we can come here, come to the credit side, and now we are saying settlement. Settlement discounts allowed to debtors. Settlement discount granted. I can just say settlement discount settlement discount granted here. I think that can be properly. And the amount that we're having 7,067. Then we go back and try to see what we have. Then beneath that, we have got credit loss. Credit loss, remember, they are bad debts. These are debtors that we are writing off that they are not able to pay back our money due to many reasons. So this one reduces the balance also of the debtors. So it's supposed to put again on the opposite side of the balance that of the balances of the debtors, which is the credit side. So we have got, I'm going to put 600 as our credit loss on the credit side. So we come here, we are saying uh, here we are saying credit loss. Credit losses, we are having 600. And then we check again if we have got anything. After credit losses, we have got credit losses are recovered, which is 1,420. So this one is not going to affect our trade receivables control, so we can leave it, which is 1,420. We are going to adjust it in the profit and loss account under the section of income. So this is what we have. So we go to the next category there. The way we've got the following checks were issued or received during the year, and we check if you've got anything again that is affecting our control. So we go down, checking. I would see that if you go down, there we have got a collection from trade receivables, which is 86,320. So this is these are payments that are being made by trade receivables or the debtors. So they reduce the amount that is being owed by these trade receivables. So it's it's a payment, so it's supposed to go to the opposite side that we have the balance. Remember, the balances are on the debit, the balances of trade receivables. So when they make payments, it's going to reduce their balances that they are owing. So you go to the opposite again, which is the credit side, and enter 86,320 as the payment. So the description there, we're just going to put bank as the description. If you come here, you see now we are saying bank, which is 86,320. So this is what we have. And then you'd see that we've exhausted everything that we have there in the list of balances. This is the last item. So we can go down to check on additional information if we have got anything that is affecting our uh, our our trade receivables control. So we go down to see, to check item by item. So if you go to the second point, a check for 300 rands was recovered from trade receivables. Tabo as payment on his account that was dishonored because of insufficient funds. So what does it mean? It means this payment it means this check was already recorded in our books as a payment that has been made, but later on they discovered that it's a dishonored check. It means it wasn't processed at the bank. So what does it mean? It means we have to remove the payment that has been made. Remember, whenever there's a payment, we go to the credit side to reduce the amount being owed by debtors. So if the check is returned, so we have to reinstate the amount again. So you go back to the debit side to put that 300. So it's just a dishonored check. So we go there. We go to the debit side. We are saying here, this is an amount that has been returned by the bank. So we are saying bank, and we have got the amount is 300. Then we can go back again to check if we have got anything that is affecting again this trade receivables control. But if you go over the information, you see that there's nothing that is again affecting the uh, trade receivable control. So we can now look for the closing balance of trade receivables control. Uh, it's given there on this point, second from last point, trade receivables control amounted to 68,000 after the disordered check was taken into account on 28 March 2022. So it means this is going to be our closing balance for the trade receivables control. So 68,000, this is our closing balance. So we can go back there. Remember, if it's a closing balance, we go to the opposite side that we have BD, then it becomes our balance CD. So the closing balance, we just represent it as balance CD on the opposite side that we are having our BD. So you see we've got balance CD. Remember the amount 68,000. So you see we've got entered everything in terms of opening and closing balance and all other information that needs to be entered there. And then we have to take note that when we are preparing trade receivable control in incomplete records, we are trying to find the figure for sales, and the figure for sales will be on the debit side here. So this is the figure that we are looking for. This is the missing figure that is making the records incomplete. So having done this, it means there's a figure that we have to put here. So we just have to balance the account so that we find sales as a balancing figure there. So we can put our double lines. So we are saying this is our double lines. So obviously it means the credit is going to be greater than the debit. So the total of the credit, if you add there, if you say 7,067 plus 600 plus 86,320 plus 68,000, we're going to get 161,987. 161,987. So this total will come both sides in between the double lines, 161,987. Then this balancing figure now we are saying 161,987 minus 300 minus 50,667. We'll just add the total of these two, then you subtract it from this total to get the balancing. So the amount that you are going to get there is 111,020. So remember, we've got balance CD here, so we need to put balance BD on the opposite side below the double lines. So here we are saying balance BD, and we have got 68,000. So this is what we have in terms of our trade receivables control. Then we can move on to the next account, which is trade payables control. So on the trade payables control, also we need to start with the balance BD, which is the opening balance, and we are going to put it on the credit side now in terms of the trade payables control. So you can just go back there to check that balance. If you come here, you'd see that we've got a trade payables control on which are the balances on 1 April 2022, which is at the beginning of the period. So it means 24,800 is the opening balance for trade payables control. So we're just going to pick that one, 24,800. And remember, we are saying it comes on the credit side. Balance BD in the amount that we have is 24,800. So we go back and check other information affecting trade payables control. So if you come down there, you'd see that we've got settlement discount received from suppliers. So what happens is when these suppliers pay their money, we are supposed to end on the opposite side, which is the debit side. So when we give them discount again, we also end on the same side, which is the debit side. So the settlement discount received from suppliers is what we are going to end on the debit side. So on this instance, we are saying when we are paying suppliers, those suppliers, it's us, the business, who is owing these suppliers. So when they make the payment, we are supposed to debit the trade payables control to reduce the amount that we are owing them. So we go there to the trade payables control and go to the debit side and say settlement discount received. So here we're saying settlement. Settlement discounts. Settlement discounts. Received, and then the amount we're saying is 2,500. And then we go back again to check other information. If you go down, you'd see that there's nothing there. Then we go to the information of the following checks were issued or received during the year. Then we go down checking other information that we have there. So we see that we've got payment to suppliers. So these payments to suppliers obviously come on the debit side again of the trade payables control. So they come in the form of bank. Obviously, we pay them through bank. So it's 22,600 that we're going to put on the debit side again. Uh, we come here and we go to the debit side, and we are saying this is our bank, and the amount that we have there is let's try to see 22,600. So this is what we have. Then we check again to go to check any other information that is going to affect our trade payables control. We are going to check again if we've got any other information that is affecting our trade payables control. So if you come here, it means we are going to additional information and go item by item, checking the information affecting our trade payables control. So you'd see that we only have trade payables control as 19,820. This is at the end of the year at 28 March 2022. So it means we are going to pick this 19,820 as our closing balance. So we can just pick that figure. So as our closing balance, remember PD is on the credit, so we just put it on the debit as our balance. CD is the closing balance. And then the amount that we are having there is 19,820. So we have the opening and closing, all the information we've entered, but the figure that we're looking for in the trade payables control is the purchase figure. So purchases will be on the credit side here. So basically we are saying this is the figure that we are looking for. And we can only find it as a balancing figure. So we can put our double lines. And then now in this form, it means the credit is going to be smaller than the debit. The debit is going to be greater. So you can say 2,500 plus 20,600 plus 19,820. The total that we are supposed to get there is 44,920. So it's going to come both sides in between the double lines. Having done this, we can find now the purchase figure as a balance figure by saying 44,920 plus 24,800. And then we get the purchase figure, which is 20,120. 120. So this is what we have. And remember, also we have to put the balance BD. So the balance BD will come here. CD we have it this side. So BD will come here below the double lines. And it's 19,820. So this is what we have. So we can now go to the next account. And so our next account now is the trading account. So we can come here. So on the trading account, remember on the debit side, we are going to put our opening inventory. We are also going to put the purchase figure, import duties, anything that is going to increase the purchases in the form of import duties, carried on purchases also on the debit side. Then the credit side, we're going to put our sales, and then we also have closing inventory on the credit side. So here, let's just go there and pick those. Let's start with the figures for sales and purchases. So we are saying for sales, I suppose on the credit. So this sales figure that we're going to put here, the sales figure that we're going to put here, we're going to put the total sales figure, whereby we're saying total sales is equals to our cash sales plus our credit sales. So the sales figure that we found in the control account it represents the credit sales, and this is our cash sales. So we are saying the credit sales figure that we got in the control, the trade receivables control, we are going to add it to the cash sales figure that we are given in the question. So we are go back there to try to find out about the cash sales figure that we have in the question. If you go up there, you see that cash sales is here, 86,120. So this is the cash sales figure. We can just indicate it there. This one is 86,820. So we add it to the credit sales that we found in the trade receivables control. Let's try to see what we have in the trade receivables control. So you'll find that this is the figure for sales that we found in the trade receivables control. So represents our credits, representing our credit sales. Then we add the figure for cash sales that we are having in the list of balances in the question, which is 86,120 to get the figure for total sales. And then here we just summarize it in brackets to say we are saying the cash sales figure 86,120 plus the credit sales figure 111,020, and then the total that you are supposed to get there is 197,140. So this is what we have. Then also we have the figure for purchases, which is supposed to come on the debit side. So purchase again, we are saying total purchases is goes to our cash purchases plus our credit purchases. So our credit purchases is the figure that we got in the purchase in the trade payables control. So we can just maybe verify that figure. We go back to check it. We are here and we are saying the credit purchase figure is 20,120. So we are going to add it to the cash purchases figure that we have in the question. So if you come here, you see that cash purchases is here, and we've got 17,608. So we add the figure for credit purchases, then we get our total purchases. So we are coming here again and summarize the working. So we are saying for purchases again in brackets, we are saying let's see. We are saying the figure for that we have as cash purchases is as cash purchases. Let's try to see is 20,000. Let's try to check again for cash purchases 17,680. Then we add the figure for credit purchases, which is 20,120. Then the total that we're supposed to get is 37,800. And then this is what we have. Then we can go again to check other figures that we're supposed to put on the debit side or credit according to the information that we are given. Remember also on the debit side, we said we are going to put our opening inventory, which we can find in the list of balances. And in the list of balances, that's where we've got our opening inventory there. At the beginning, we've got inventory balance on 1 April 2022, which is 28,920. So we put it on the debit side as our opening inventory. So we are saying here we've got opening inventory. Then the figure that we have there is 28,920. And then on the credit side, we are supposed to put our closing inventory. So our closing inventory figure, we can only find it again in the additional information here, whereby we are saying inventory was 64,720, 28 March 2022, which is the closing date. So we pick this figure as our closing inventory. So we can go back there and put that one. So here we are saying the figure that we're having is 64,720. And then we can check for other entries like carriages. That is going to increase the figure for purchases and put it on the debit side. So if you come here, you'd see that if you go on the list of balances, that's where we're going to find those figures. We have got import duties here, which is 3,498. And we look if we have carriages, we've got also carriages on purchases, which is 3,600, which is supposed to come on the debit side. So we are going to put that, those two figures. So we come on the debit side, we are saying here we are supposed to put our import duties. And the figure that we have is 3,400, 3,498. And then we also have carriage on purchases. Carriage on purchases, we have 3,600. And then we, after having entered this, we can go again to check if we've got any other information that is affecting our trade payables control. But obviously, we have exhausted in the list of balances, so we go on additional information, go item by item to try to see if we've got anything affecting our trade payables control. So you'd see that there's nothing there, so we can go back and balance our account. So the trading account, the figure that we are trying to find is the figure for gross loss or gross profit. So if we have the credit side being bigger than the debit side, we have a gross profit. But if the debit side is greater than the credit side, it's a gross loss. So that is what we have. So if it's a gross profit, it means the balancing figure will be here on the debit side. But if it's a gross profit, the balancing figure will put it here as gross profit here on the debit side. But if it's a gross loss, it's supposed to come here on the credit side as gross loss. So we can try to see which side is greater. But if you add the two sides, we'd see that the credit side is the bigger side. So it means we've got a gross profit which is supposed to come this side, the debit side. Then we can put our double lines. So you'd see that we are not going to have a balance CD in the trading account. The balance figure straight away, we are going to call it gross profit or gross loss. So if you add the credit side, the total, the bigger total is 261,860. And we put it both sides in between the double lines. Then if you say this figure minus all the figures that we're having on the debit side, we are going to give a balancing figure of 188,042. So this is what we have in terms of the trading account. So this gross profit, we are going to straight away transfer it to the profit or loss. Remember, it goes to the credit side of the profit or loss. So as figure coming from the trading account. So we can just straight away put that figure for gross profit that we got in the trading account. Here we are saying trading account. And the figure that we are talking about is the gross profit. We can indicate in brackets that we are transferring the gross profit figure. And the figure that we got as gross profit there is 188,042. So we're going to put it here. Right. So in this profit or loss account, we are going to put all the incomes on the credit side and all expenses on the debit side. As simple as that. So we just pick item by item and we put expenses on the debit, income on the credit. So we come here, but before you put the expenses and the income, you try to see if there's any adjustment about the income or the expense. Remember, we have to adjust for prepayments and accruals. So before you enter it, check if there's no adjustment, you put as it is in the list of balances. So we're going to start here where we have got water and electricity, we have 25,581. Then we go to additional information to check if you've got anything to do with water and electricity. But if you go there, you'd see that there's nothing that we're having that is affecting water and electricity. So we take as it is 25,581 and put it in the profit or loss on the debit side. So we come here. So we come on the debit, and that's where we're going to put our water and electricity as an expense. Remember, we said expenses on the debit. So we are saying water and electricity. Then water and electricity figure that we are having is 25,581. 25,581. So this is what we have, and then we can go on to check other expenses or income. After water and electricity, we've got telephone, 9,200. On telephone again, we don't carry it as it is. We first of all try to see if we've got any adjustment affecting telephone. So it's that the first item is saying telephone account for March 2022 was still due 650. So this is an accrual. Remember, accruals, we are supposed to add them, and prepayments, or we are supposed to subtract. So we're in this sense, we are trying to comply with the matching or the accruals concept. So we can just say the figure that we are having in the list of balances, 9,200, and we are supposed to add this 650. So we summarize it as it is. So here we are saying telephone again is an expense, so it's supposed to come on the debit side. The brackets to summarize the working. Remember, we're saying 9,200 plus 650. And obviously, the total that we're supposed to get is 9,850. Now we go back to check the next item. After telephone, we've got rates. Rates also is an expense. So we go to additional information to see if we've got anything affecting rates. We see that there's nothing. So we pick 1,220 as it is. And also we have got salaries, which is 125,700. We check on the additional information to see if we've got anything affecting salaries. You'd see that we have got nothing. So it means we are going to pick 125,700 as it is. So we can just pick those two. So we are saying on the debit side, we have got rates, 1,220. And then we have got salaries, 25,700. Right. After that, we have got we are going to the next one, which is import duties, which we adjust in the trading account. Then we have got postage, 3,600. Postage, we have got 3,000 as. Let's try to see. Postage is 270. We are here. We have got 270 for postages. We check again. It's information. If you've got anything affecting postages, you'd see that we have got nothing. So we can just go put it as it is. So we are saying postage 200, 270. And then we go back to check another transaction. So after postages, we have got, we go carry on purchases, we adjusted it, cash purchases not part of that. Then we see that we have got, we have exhausted everything. But if you go up there, let's try to see. If you go up there, you'll see that we have got something that we have there. We've got some credit losses, which is our bad debts, which is 600. So it means we also have to put our credit loss of 600. And also we have got a settlement discount allowed to, the settlement discount received from suppliers. This is an income which is 2,500. We are supposed to put it on the credit side of the profit or loss. Credit side, this one is an income. Remember, this is an income we received. So this one, settlement discount allowed to debtors, it's an expense supposed to come on the debit. And then we've got credit losses, it's an expense again, supposed to come on the debit. So we can pick those ones and enter them there. Then we've got credit losses recovered. This is an income again, supposed to come to the credit side. So we're going to pick these figures. We'll pick the settlement discount from suppliers, 2,500 on the credit side, settlement discount allowed to debtors on the debit side, credit losses on the debit, and then credit losses recovered as an income again on the credit side. So we can just go and enter those. So we can start with the ones on the credit. We have got our credit loss recovered. And the amount that we have there is 1,420. And then we also have on the credit side, settlement discount received. Settlement discounts are received. And the amount that we have is 2,500. And then we go to the debit side. And on the debit side, we are now putting the other two. Remember, we have our credit loss, which is 600. And then we also settlement discount granted as an expense. And the amount is 7,067. So let's try to see there. And then this is what we have. And then we try to check if we've got anything again that is affecting these entries. We go back to additional information. So we go item by item to try to see if we've got anything that is affecting again the profit or loss in terms of income and expenses. Go down, you'd see that we've got something there, point number 3. 851 runs per month was paid by stop order for insurance taken out on 1 November 2021. So you'd see that we've got no insurance in the list of balances. So that's we need to go through the internal information after exhausting whatever you're having in the list of balances. So we have picked this one, which is representing insurance of 851 runs per month, which was paid, which was taken out on 1 November 2021. Insurance taken out on 1 November 2021. So it means this is November, starting in November and then ending in. We check now where the year is ending. So if you go up there, that's where we are going to check where the year is ending. The year is ending in March 2022. So we can count the number of months that we are having there from November to March. We've got November, December, January, February, March. Then we count the number of months that we're having 1, 2, 3, 4, 5. So we've got 5 months. So the amount that we are given there is was paid for 5 months for insurance. So what we are saying, this amount that we are having, 851, we are supposed to say 851, then multiply by the 5 months to get the total. So if you try to calculate that, you're supposed to get 4,255. So we can go back and summarize that working. Insurance is an expense, remember, so it's supposed to come here, debit. And in brackets, we're just saying 851 times 5 months. We got the figure that we got is 4,255. So having done this, it means we've exhausted everything. After going through all the additional information, we've we found that we have got nothing except this insurance. So we can now balance our account. So in this case now, if the credit side is greater than the debit, it's going to be a profit, a net profit. Credit side greater than debit side, it's a net profit. If the debit side now becomes greater than the credit side, it now becomes a net loss. So in this case, if you add the two totals, you see that the total that you're having on the credit is greater. So it means you're having a net profit, which is supposed to come on the debit side. So this is what we have. So we can just try to balance it, input our double lines. So I remember the credit is greater. If you add the total of the credit, you'd see that it's 191,962, which comes both sides in between the double lines. And then you say now the 191,962, you subtract everything that is on the debit. You use balance figure that you get there is 117,490. So this marks the end of our question. Those who have subscribed, please subscribe and share. We are still coming with more videos as we prepare for exams. Meet again in the next video. As for this video, I'm signing out.